Hello, everybody. This is Dr. Sasha with you. How are you all doing? Welcome to the YouTube channel, The Trading Champs, the best channel for gold analysis. I must be claiming that. So here you are. Next week, Monday is on, guys, and here we are. We are still making a lower low on high time frame. You can see here. And then on weekly, we are still stuck within the same area, so price is contracting. Now we all know the key levels that we have on here. So on Thursday and Friday we had the bearish candles, and now we are ranging after breaking out of the zone. That was 1830-ish area, which was very important on gold. We have come out of this with the push to the top side, and there was no news, nothing, no fundamental factors were involved, and without any retracement, we have just pushed to the higher side, and 1847 was the push to the top. Now, I still have my runners that are running for me from 1890 level, and then obviously the bottom down wick that we got on here, 1802, and then I have another one, and then we have taken a buy on this one as well, and secured some pips so far, and still my runners are on for all these positions to the top side. What is happening on the most recent level? These key levels are very, very important. As you can all see, 1870 level, mark it up. 1850 is the one right here above 1830. That is significant enough. And then we have 1810, which has been respected many times previously. And 1800 is, of course, a very important psychological level. Then we had 1790. Then we come down to 1760. And please mark down 1750 at the end. I do not expect your price to dump down before that straight away. Okay. So these are all very important levels. Now, coming down to the daily push that we had up here right now. So our last weekly candle that we see on here is again showing good wick rejection from both the sides, right? Wick rejection from 1847-48 area and wick rejection from 1806 area. And after this bullish momentum, this candle, so this was the NFP dip down. After the NFP dip down, we had constant push to the top side, and this push to the bottom side is again FOMC move down. So this was FOMC. So news and fundamentals play a very important role while making a move on the gold. So keep this in your mind very, very carefully, and trade only what you see. Do not try to predict too much. Only react to the prices. Monday is okay, not too volatile, although we have flash manufacturing PMI orange folder today, so it can play up some role. And then we have tomorrow another consumer confidence. And then on Wednesday, I'm expecting some volatility. Reason, because I have FOMC statement showing up on here, federal funds rate, FOMC press conference. And then this is very important, and it can cause a lot of volatility on the gold chart. We have advanced JDP later on Thursday, and Friday could be volatile as well because we have another important consumer sentiment, important orange folder. Now, a lot of volatility could be seen on Thursday, on Wednesday, and I am expecting ranges until Tuesday. Now, coming back to these charts, I have noticed previously when we were in these areas, for example, this push to the top side. Let's come back on here, 4-hour chart. So this was the FOMC move all the way, right? And this was initial FOMC. Price dropped down. So before FOMC, the same day, price kept moving down a day before or so, and then took it to a level from where everybody has taken, maybe the market movers and the big banks and all of them, they've taken the move all the way with no retracement, straight push to the top side, 1880, okay? And then we recorrected the whole thing to the downside. Another FOMC push was last year in December, and then we moved all the way to the top side again. NFP pushed it higher and brought it up. Then there was this manufacturing news, which was not even important, gave it another push to the top side. And then if you will be looking here, we did not come back down to retrace this area. Everybody was waiting for this retracement, even to 1800. We did not get it fully, just a little bit tap. We got it, but just a little tap, right? All of this area has not been retested in here. So this is important. This area is important. Now we are back up and ranging exactly how we were ranging in this. So it's like one step higher. Is it coming back and retesting? This was hanging in here for quite some time. And then we dropped down on Friday to get this twice here at 28 level. So what did we do? We held the sell all the way to the bottom side. So once the move was on here on 1 hour, for example, let's say like that, right here. So when we were here, we were expecting what is going to happen next. I posted this chart and I drew this setup and I posted it on my Instagram stories. And then I was expecting on a smaller time frame that there was a small OB on here. And price could come back and would not give us a lot of retracement. It is only going to maybe just come to this level and then 38-ish level, 37-ish level, and then we can be expecting a push higher and then come back down to 1828 area for the retest and then maybe not continue down. And exactly the same thing happened. So spot on analysis, we pushed higher and then we came back down right after this push. I can show you. This was marked down on my charts initially, this area. So whenever there's a small order block or some setup that we usually look at, price comes back to it to fill it up. That's exactly what I was expecting in this area. It came, it tapped here, moved higher, and then came back to 28 right here. We traded this one, we bought from here, we sold from here again, and today again I have taken a sell and 40 plus pips sorted after London session on live Zoom, and which was a good entry. I posted this analysis again on the Telegram. So I usually post analysis, of course, all the time, 100% with my private group members, but sometimes with the Telegram general group, and then sometimes on the Instagram when I'm sure of the moves. So now what should we be expecting? I am expecting price to come down, maybe take these people out and then range between specifically 1830 and then 1850 until FOMC. So we could be ranging in this area. So you could be looking for the wick rejections and then take a buy and a sell. But fundamentally driven news, don't expect a lot of technical to play out this week because we know FOMC is on Wednesday, and in the world, inflation is playing a big role, and now all the economists and all the governments are trying to take control of this. They might be releasing some packages, they might not be releasing some packages, and they basically want to strengthen the economy. And in that case, we will be expecting drop down on the gold if that happens, right? And other factor that could be discussed in the meeting would be, again, interest rates. Now, they said in last meeting that interest rates would be discussed next time in March, but let's see if they will be following the footsteps of pound, New Zealand, and the Chinese currencies, and they are going to increase and look into this. Then also anything of that sort, interest rates high means gold is dumping down again. There are two other factors which could be making the bullish push, and those two factors are, one is tapering and the other was COVID cases. We know that COVID cases are drastically increasing, and being a doctor, we can definitely say that, and even in Perth, in my city here. So this factor could be the risk to the economy, and then can cause gold to touch 1870 area and even higher if things will stay under control. In case if they're going to say that they have to change some policies, they I don't think they'll announce lockdowns, but if in case they are going to say something worrisome, in that case also you can see a spike to the top side. So keep fundamentals in your mind and keep the weekly support and resistance levels in your mind. I see the weekly resistance is at 1875 area, somewhere here, and weekly support could be 1785. Okay, so keep the weekly support and resistance in mind. This is, of course, FOMC week. Be careful when you're trading.